When most people seek financial advice, they assume the person sitting across the table is legally required to act in their best interest. But that assumption can be wrong. Every financial advisor is not a fiduciary at all times. And that distinction matters more than most people realize. A fiduciary is held to a legal and ethical standard in the financial services industry. By law, a fiduciary must put the client's interest ahead of their own, disclose conflicts of interest, recommend what is optimal, not merely acceptable, and act with ongoing care and loyalty. That's very different from the standard that governs most of the industry. Many advisors operate under what's called a suitability standard. Under this standard, a recommendation only needs to be suitable, not the best option available. This leaves room for commission-driven products, incentives, and recommendations that may benefit the advisor or their firm more than the client. Here's where it can get even more confusing. They may act as fiduciaries when offering fee-based planning or investment advice, but switch roles when selling insurance products, annuities, or commissioned solutions. In these moments, they are no longer legally obligated to put the client first, even though consumers may never be told when that switch happens. Same advisor, same meeting, different legal standard. That's why simply asking, "Are you a fiduciary?" may not be enough. The real question is, are you a fiduciary at all times, and will you put that in writing? Working with a fiduciary is designed to ensure your advisor is legally bound to act in your best interest throughout the relationship. Conflicts of interest must be avoided or fully disclosed. Fees and compensation are transparent. Advice is based on what benefits you, not a sales quota. As a certified financial fiduciary, I've taken a formal oath to always act in my client's best interest without exception. That fiduciary duty is ongoing, enforceable, and central on how I serve clients, families, and business owners. Because when it comes to your wealth, your future, and your legacy, trust is not a marketing claim, it's a legal responsibility. If you've never asked your advisor were they a fiduciary at all times, now is the time. And if you want clarity, transparency, and advocacy rather than sales pressure, working with a fiduciary isn't just important, it's essential. When it comes to your wealth, assumptions can be costly. If you don't know whether your advisor is legally obligated to act in your best interest at all times, now is the moment to find out. Schedule a complimentary 15-minute fiduciary strategy session to gain clarity on how fiduciary advice protects you, uncover potential conflicts you may not be aware of, and understand the questions you should be asking before your next financial decision. Choose transparency, choose advocacy, choose fiduciary guidance you can trust.